Hello guys, welcome to today's video on the difference between cryptocurrencies and stocks. Cryptocurrencies such as Bitcoin and Ethereum is a digital or virtual currency that uses cryptography for security. It operates independently of a central bank and it's decentralized, meaning it is not controlled by any government or institution. Transactions with these cryptocurrencies are recorded on a public digital ledger known as the blockchain. Stocks, on the other hand, are a type of investment that represents a share in the ownership of a company. When you own a stock, you own a small piece of the company and have the potential to earn money through dividends or by selling the stocks at a higher price than you bought it. Stocks are traded on stock exchanges, and their value is influenced by a variety of factors, including the performance of the company and the overall state of the company. Examples of stocks are Tesla, Amazon, Nvidia, Apple, Netflix, Microsoft, and what have you. One of the major differences is the level of risk involved. Cryptocurrency is considered a high-risk investment due to its volatility and lack of regulations. The value of cryptocurrency can fluctuate widely in a short period of time, and there is always the risk of fraud or hacking. Stocks, on the other hand, are generally considered to be a less risky investment. While the value of stocks can fluctuate, the overall stock market tends to be more stable and predictable over the long term. Another key difference is the way in which they are purchased. You can buy cryptocurrency through cryptocurrency exchanges such as Binance, Coinbase, Bybit, KuCoin, etc. All you need is an account with the exchange platform. Stocks, however, can only be purchased through a brokerage account. Who then is a stockbroker? A stockbroker is a financial professional who executes orders in the market on behalf of clients. A stockbroker may also be known as a registered representative or an investment advisor. Most stockbrokers work for a brokerage firm and handle transactions for a number of individual and institutional customers. Stockbrokers are often paid on a commission basis, although compensation methods vary by employer. Regulation is one area that separates cryptocurrencies from stocks. So cryptocurrency is not yet fully regulated and its value can be highly volatile. Stocks, on the other hand, are regulated by government bodies such as the SEC or the Security and Exchange Commission, and their value tends to be more stable. Another difference is the level of accessibility. Cryptocurrencies can be purchased by anyone with an internet connection and a digital wallet, making it a relatively accessible investment option. Stocks, on the other hand, are typically only accessible to those who have a brokerage account and a certain level of knowledge about the stock market. Cryptocurrency is relatively new technology and its use case and potential are still being explored. While it is primarily used as a store of value and a medium of exchange, its application in areas like smart contracts and decentralized finance are still in its infancy. Stocks, on the other hand, have been around for centuries and have a proven track record as a way to invest in companies and potentially earn a return on investment. It is important to note that there are similarities between these two. Both cryptocurrency and stocks can be bought and sold on various markets, and their prices can fluctuate based on supply and demand. Both can also be used as investments and can generate returns for investors. In summary, cryptocurrency is a digital virtual currency that is decentralized and operates independently of a central bank, while stocks represent a share in the ownership of a company and are regulated by government bodies. Thank you for watching, and I hope you find this video informative and helpful in understanding the difference between cryptocurrency and stocks. See you in the next video.